All right, we are live. And the market is down a little bit this morning. Let's see here. Let's check out. Let's go back to, let's get TradingView open. Okay. Let's zoom out a little bit. Let's turn off this VWAP. All right, let's just start by taking a look at our daily. Again, look, we had a couple of days of consolidation here after last week's big run up, right? So yesterday, look, we started the day, right in the middle of the consolidation zone. We dipped down to just below the bottom of the previous day's low, and we shot right back up. And then we got this little kind of hammer. I wouldn't call it a bullish hammer, but it's a hammer. And then today, we're down. We're down to the bottom of that range. Again, we went down to about yesterday's low, bounced back up. We'll see the same things here as we go through down in smaller time frames, lower time frames. Here we go, and let's check now the 5 minute, see how we're looking. All right, just chilling here, kind of near the bottom of the range here, right? Super wicky. Got all these barcodes here, right? We're just not even going to touch this stuff for right now. And now let's turn on our VWAP. Let me see where my settings are for that, because for right now, I'm going to turn all of these upper bands off. Okay, and here we are. Look, we are 21, 20 points away from VWAP. Let's go back and turn on my bands again. I don't think I need, let's see here. Let's do our upper bands. Let's check those out. Visibility, let me just see something. Okay. All right. If I'm looking at my 3 standard deviation bands, we're not even close to them. This market is not out of balance too bad. Maybe kind of on the daily, but I wouldn't even call it out of balance as much as I would just say, like, I don't know, man, look at this. We got a bit of a bull run happening here, right? What's happening with Bitcoin, by the way? Let's check this out. Just do all. Let's go BTC. Delete that. Da-da-da-da. Holy cow, $92,000. What? Ethereum. How are we looking, Ethereum? Not as good as Bitcoin. Well, all right then. All right. Back to NQ, because that's what I trade. Right? NQ. Wrong one. NQ. There we go. I mean, look. We're going to come back down and touch 27, right? I think we probably should. We probably should. We may need to jump up a little bit. Who knows? Maybe we go up. Maybe we come down. What is this? What is this? This is where we draw like a stupid shape. shapes, drawing shapes. Check the 5 minute. Here we are. We're back. I have all these drawing tools. I don't really use them. I use the trend line some. I use the horizontal line some. That's why they're up here. So like yet again, just nothing. Nothing tradable. So here's what happened to me last week. I had 20 funded Apex accounts that I have been trading all together for a while. Nice and slow and consistent, right? Literally grabbing $100 a day, $200 a day. Of course, I had a couple of days where I'm losing, right? But I have a fairly high win rate most of the time when I'm trading correctly, when I'm disciplined. And went to take my daughter to school, came back, pulled up my accounts, and they had all been busted. And somehow I had placed a trade that I was unaware of. I think I clicked, and created an order that I didn't mean to, that I didn't see. And it filled and went against me and blew all of those accounts. So, sometime here in the next couple of days, I'm going to start anew. I'm going to start fresh. We're going to start with brand new PA accounts. I may do the evals, but there's a kind of an easy way to get around the evals. I'm on the fence about that because I feel like it kind of can help create a bit of a gambling mindset, which is bad. Gambling mindsets are bad. Nothing here at all. I wish I had someone to talk to. This is some boring stuff. I mean, just hanging out doing nothing. We are approaching the low of day. Again, like, man, what a sort of crappy little range we have here. But it's like, look, you see this candle start moving up, and you go like, "Ooh, look, it's moving up." No, it's not. Not really. This is what it keeps doing. So I do a lot of fishing. I fish for bass quite a bit, and one of the things in bass fishing a way that you can get fish to bite is through what's called a reaction strike. So this is where maybe you like put a lure in front of a fish's face and you let it sit there for a second and then you jerk it real quick. And when you jerk it, they go like, oh, and they snap, bite it. I think traders are a lot like fish, right? We fall for the trap. We reaction bite a lot, and then we get hooked. And by hooked, I mean we get screwed, right? We lose. Getting hooked in the situation doesn't mean being addicted. Like, oh, I'm hooked on this. I mean, we fall for the trap and we are caught. Such a huge part of trading is just learning how to not reaction strike like that. I've started thinking about the times when I take a trade and it goes against me, right? So let's say I short something and the market starts going up. And then it comes back down toward me. And I'm like, all right, there we go. It hasn't hit my stop loss, right? And it's coming back toward me. I'm like, all right, maybe we still got it here, still in the trade. And then it comes right back to where my entry is and then moves against me again. When I start seeing that, I've started thinking, you know what? I may be positioned with all the rest of the suckers, and I should probably get out. Because again, to use another fish analogy, it's like a school of bait fish,